Good evening, everyone. I'm Reginald Demery, and welcome to this Sigma Virtual Hour. Today, we have a special guest, Andy Gomez, and he's here to talk to us about navigating the home buying process, especially for us first-time buyers. Navigating the home buying process can be a very complicated process that a lot people can go through, and is want to make sure that you're doing a process correctly. So I want to now pass the mic over to Andy Gomez.
Hey, good evening, everyone. Reggie, thanks for having me. My name is Andy Gomez. I'm with Iron Valley Real Estate Hampton Roads, and I'm here to tell everyone about how to navigate the home buying process. Whether you're a first-time home buyer, second-time home buyer, you're thinking about it, whatnot, the process is very important to understand because it's going to shape the way that you shop around and look for your first or next home. So I'll tell you a little bit about myself as we get started. So my name, obviously, Andy Gomez. I crossed the illustrious Phi Beta Sigma fraternity back in fall 2011 at the Gamma Zeta chapter in Savannah State University down in Georgia. I've had a blast. It's been one of the greatest decisions of my life. I'm an active duty Navy lieutenant, and I'm also a top producing realtor. I was in the top 18% of all realtors in Hampton Road during 2023. I'm currently ranked number 200 out of 8,750-ish realtors in the area right now. Top 10% of all buyers agents, about 3.5 million in volume in 2024 so far. My best attributes as an agent, I'm a very good negotiator. I save my clients around $12,000 to $15,000, all my buyers on closing costs, and I've had a 100% success rate. So every client that has gotten pre-approved and actually started the home buying process with me has closed and they're now homeowners. So first, I want to present you with the overarching home buyer's roadmap. And this is just going to be how we navigate this process, and it'll also serve as a quick reference guide as we move through the entire what is an adventure slash journey to buying a home. Most people don't understand that buying a home isn't a 1 or 2 day process. It takes around 30 days for a normal transaction to go from the actual finding your home and accepting an offer to closing on that house. But there's a significant amount of work that comes before you're even ready to start looking at houses that people don't know too much about. So we're going to go into that and address every step of the way. And please, if you have any questions, feel free to ask in between. So first, we have the buyer's roadmap here. It lists out every step of the way that a home buyer is going to take that goes from meeting with a realtor and discussing how they want to start their home buying process all the way to receiving keys on that closing day and moving into their new home. So the first step of that process is meeting with a real estate professional. There are many real estate professionals just in Hampton Roads, over 8,000 of them. So why should you pick the right one? Things you should do. You should have a buyer's consult where a real estate agent comes and meets with you and you're going to discuss your needs and wants with them. How much house do you need? Do you want a condo? Do you want to live near the water? Do you want a big den, a game room, a garage? What features are important to you? What is your financial comfort zone? What's your desired monthly payment? And how does that match to the reality of your wants and needs? I will tell you from experience, a significant amount of first time home buyers have unrealistic wants and needs compared to their financial comfort zone. And it's up to us as agents to reel you in and show you, hey, within your financial comfort zone, I can still take care of you, but you have to be realistic and work with me. You need to discuss the home buying process with your agent. This is going to serve two significant features. The first one is going to be proving to you that they know what they're talking about. And the second one is to educate you on the process because most families only buy a home once or twice in a lifetime, maybe on average, versus a real estate agent who produces sells homes monthly, if not more frequent. So this process to us is much more familiar and it's a life milestone for you. So we want to make sure that we take care of you. Your expectation management, like I said earlier, your needs and wants versus your financial comfort zone, but the amount of inventory and the houses available in the market matter. Market pricing, neighborhoods, school zones. If you have certain expectations, you have to understand that the market is going to help influence what you can get, but it will not dictate it. We dictate the market. So we make sure that we take care of our clients. The next step is going to be getting pre-approved. But before I go into that, are there any questions so far?
There are no questions so far.
All right, so we'll go into getting pre-approved. This is arguably one of the more important parts of this home buying process. I'm going to say that a bunch because buying a home in itself is extremely important and every step of the way is vital to getting it done correctly. But choosing your lender is crucial because it lays out a substantial amount of things. The first thing you do when you want to get pre-approved is you want to shop around for lenders. A lot of people are fixated on interest rates, but there's so much more that lenders can do for you other than interest rates. Most lenders may have grants or types of programs that can help you get that closing cost or lower your interest rate, or certain programs for income ranges that can help you achieve your home dream goals within your budget. You just have to shop around and ask. Local lending wins offers. So a lot of people, Rocket Mortgage and other lenders that are big national chain lenders but don't have a local office, there's nothing wrong with losing them, but the power of having the ability to just call someone that's in an office 10 minutes from you and say, "Hey, I know it's 8 o'clock at night, but we found the house. I need some help to get everything lined up," is irreplaceable. And a lot of offers that I've dealt with, more times than not, local lending will win over other offers. And then agent recommendations, right? So every agent has a lender that they work with, if not exclusively, very closely. Personally, I use Veterans United, and they have a local branch here in Lynn Haven in Virginia and in Virginia Beach, and they've been phenomenal to me. I just purchased my own new house, and I use them myself, and I would recommend them 100 times over. And any agent that you work with is probably going to have somebody they work with, and that's going to help you through the process because now the agent and the lender who work together have been working together and they're going to work together with your best interest in mind. And it will help the overall home buying process be more smooth.
So, Brother Gomez, I have a question. So, how
Sure.
long does it take to get pre-approved?
It depends. For some lenders, it's a couple of hours if they're digital. Other lenders may take a day or two. It just depends on what you need. I would say most pre approvals can be done within 48 hours, but I do know some that can be done in like 3 or 4 hours. A pre-approval
Okay.
application. Oh, good.
And I guess another question is, when getting it pre-approved, how does that affect people's credit score?
That also depends on lenders. So with Veterans United, the initial pre-approval uses a soft credit hit. So it doesn't actually pull your hard credit score. You don't pull your entire hard credit score until you find the house and go under contract, which we'll talk about a little later. Other lenders, they hit the credit immediately as soon as you go in for pre-approval. And then you have about 30 days or so, 45 days to shop or to shop around for lenders and, be exempt from the the negative remarks of credit hits.
So I guess it sounds like picking a lender is also a really important process in terms of buying a house. What can you tell people in order to ensure that they are picking the are shopping for the correct lender?
I would recommend that when you're shopping for your correct lender, the first thing you need to do is find out what your needs are, right? So if you're in a certain income range and you need types of programs that the lender can provide you, like closing cost or points down, or they have a special grant for first time home buyers. If that's something that you need, find a lender that offers you that. If you're a veteran, find someone with a good VA loan program that has
And
comparable interest rates.
and so we do have a question from Facebook. Speaking of VA loan, what is the difference between an FHA loan and a VA loan?
Yeah. So a FHA loan versus a VA loan, the first most notable difference is that a VA loan does not require a down payment. So a VA loan is insured by the VA for you. So it alleviates a few things that other loans like FHA and conventional have to do. First thing they have to do is they have to put down a down payment of some sort for conventional and FHA. On a VA loan, you don't have to do that. On a VA loan, you also don't need primary mortgage insurance because your home is insured by the VA. To that end, when you're using a VA loan and you receive an appraisal, the appraiser can, one, order repairs, which is something that they normally can't do, and two, the VA will not fund your loan for a larger amount than the appraisal comes back at, which means you can't purchase an overpriced house. You're literally protected by the VA. An FHA loan is a housing assistance program, federal housing assistance program that helps you with a lesser down payment and lesser primary mortgage insurance, but you're still required to put a down payment down versus conventional, which is a normal loan with a traditional down payment and traditional primary mortgage insurance. Does that
Thank you
answer?
for that does answer the question. And I do have one other question. One of the things that's currently deterring people from buying houses is the current interest rates. What can you say are the current interest rates right now?
So I am not a lender, and I do not normally speak on rates and stuff like that because I am not a lender. Whenever I get asked questions like that, I will immediately go to my preferred lender, ask her for the market situation. I am monitoring it, but I don't really speak on it because I'm not a lender. What I will say though is a lot of people are deterred from by the current interest rates and they don't want to buy because they're like the rates are so high, the rates are so high. Well, in Hampton Roads, the market prices are increasing just as rapidly as the rates were a little bit ago. So the longer you wait to purchase a home, the higher you think the rates are going to be. But if the rates drop, the prices are still going to continue to increase. You can refinance your rate later on down the road, 6, 8 months, a year. You can refinance your interest rate when they drop. You cannot refinance the value of your home. A home valued last year around this time, the median home value in Hampton Roads, I believe, was like $325,000. It's almost 340 now. But the interest rates kind of stayed steady. So now people who didn't buy because the interest rates were high last year are looking to buy now, and the interest rates are the same, but the same house is $15,000 more than it was.
That is a lot. Thank you. Thank you.
Yeah, absolutely. All right. So moving forward, after getting pre-approved and using your agent's recommendations, you're going to set your comfort area. So previously you talked about your financial comfort zone, which is what you think you can pay a month. There's no guarantee that your pre-approval matches that amount, right? So you're going to have to look at what the mortgage amount you're pre-approved is for, what that monthly payment is, including insurance and taxes, and where you're comfortable at in that price range. And this is very important to set realistic goals to how you're going to purchase your home because you need to know what you're comfortable with and where you're shopping at. There are a few ways to lower your mortgage payment. You can buy down points, which is where you pay 1% of the loan value to the lender and they lower your interest rate by a percentage that they have deemed. It just depends on which lender you go with, but it will help you lower your mortgage payments. And then there's something that's very popular right now with higher rates called a 2-1 buy down. A 2-1 buy down is when you receive 3% in closing costs or concessions from the selling side, and they use that to buy down the cost of your mortgage by 2% for 1 year and 1% for the second year. They buy down interest rates. So if you have a 7% interest rate you're pre-approved for, you buy the house with a 2-1 buy down. The first year, your mortgage payment you're paying feels as though you have a 5% interest rate. And then the second year, it feels as if you have a 6% interest rate. Until the third year, you're paying that full 7% that you had in the beginning.
Thank you. We have two questions actually. What first question is, in what situations would points actually be beneficial to the home buyer, or and when they would not be beneficial to the home buyer?
I remember back in when I bought my second house in 2021, the rates were like 3%. It didn't really make sense to buy points because the rates were already so low. If you're just shy of your desired mortgage payment and you just need a little kick, a couple $100, 50, 60, $70 here and there to make your mortgage payment into your desired range at the house, points might be for you. They may be what you want. If you're going to do any kind of buy down, points may not be for you because you go into that kind of expecting to refinance down the road.
Okay. And the second question is there a cap on the amount of points you can actually buy down?
It depends. Yes, for the most part, I see lenders not liking to go more than 2 points, but it really just depends. So I would have to ask my lender kind of what the guidelines are because I don't know them specifically. But I will ask the question and get back to you.
And last, we actually have another question from Facebook. How much do you have to put down on a FHA loan?
I believe it was. I'll get back to you in one moment because
Thank
I
you.
have to look that one up. Apologize
Thank
for
you.
not having that off the top.
You can
Um,
proceed.
okay, sweet. So the next part of it is taxes and insurance. How many people here have looked at Zestimates? I'm sure people look at Zillow all the time and they're like, oh, my Zestimate says I can get this, that, and the third. Zestimates are just what's called principal, which is just the value of the actual home without including any homeowner's insurance or taxes that actually do come out of your mortgage. So when your mortgage lender starts your escrow account, which is an account where they put funds every month to cover that insurance and the property taxes, that has to be added into your loan amount or into your mortgage. And that's not accounted for in like Zestimates and stuff. So when you're looking at what your comfort zone is, you have to make sure that your lender is giving you a comprehensive account of what your taxes and insurance on the ideal property are going to be, along with the principal and interest, so that you know realistically what your mortgage payment is going to be. And then we need to look at closing costs, right? So closing costs, a lot of people don't understand. These are your lender's fee, your underwriting fee, your title insurance, All the fees that are you normally can't roll into your loan, especially in VA, you can't roll them in. So they have to be paid at closing, whether it's by you as the buyer or conceded to you from the seller. And so you need to know if you have the cash reserves to pay your own closing costs. Do you need closing costs? Can you meet somewhere in the middle? That's something that your agent needs to know up front in order to help you get the perfect home. And then the final piece of this is for VA lenders specifically is VA funding fee. So the VA has a funding fee in order to keep the process running, which is going to be financed into your loan. So if you buy a house for $300,000 on a VA loan, the funding fee is 2.15%, I believe. So when you see your loan, it's going to say $306,000. And that's because the VA funding fee gets rolled into it in order to keep the program going. And a lot of people don't understand that. So when they see their final disclosure, like, hey, my house was only X amount of money. Why is the loan more? Well, because you're using a VA loan. And in order for you not to have to make a down payment and not to need primary mortgage insurance, you pay this small funding fee to the VA to keep the program alive and help our veterans.
So one of the things that you threw on there was the closing costs and how it can actually add on to the actual value. I mean, the cost of the house. Is there any way to negotiate those closing costs or reduce them altogether?
I will say that closing costs, well, everything in the transaction is negotiable. The closing cost, there are some fine things in the closing cost situation you can shop for, like your first annual insurance is included in your closing cost. There's a bunch of like your title fees, who you use, who your lender is, how much is your lender's underwriting fee, how much is your lender's fee to just originate the loan, right? So lenders have different fees. You can shop around for stuff like that. Other stuff you can't shop around for, you can't shop around for your taxes. You're just going to pay what your taxes are. There's other fees in there that you just can't shop around for. So there is a mixed way of lowering them if you really want to do it. As far as getting rid of them, I don't believe so. And then the second part of that is that you can negotiate with the people you're buying the house from to cover those closing costs for you. If you are willing to, ask for them at the original offer of the loan, maybe they'll give them to you. Or if you need to offer a little bit more on top of the purchase price to compensate for them conceding some of those closing costs in the long run, that's a fairly common tactic as well, and it can be done too.
Thank you. We have another question from Facebook. Are there any programs to help with closing cost?
There are. So a lot of lenders have like closing cost grants. There is a few lenders that I know of that do kind of the boost program where you can finance your closing costs through a secondary loan and they allow that to happen. VHDA, which is Virginia Housing, they have a program that allows you to finance your closing costs, but it's a bonded loan, which means that it's going to go through underwriting at the lender side as well as at the state side to make sure your income requirements are accurate. There are plenty of options out there, and this kind of stuff is peak why you have to choose the best lender for you because your lender is the one who has those kind of programs that can help you or knows about them. When even as an agent, and I sell a decent amount of real estate, I ask my lender new questions every single day because I'm not a loan officer and they're the experts in the field.
Thank you for that.
Yes. All right. Next, we search for homes. So this is the fun part. It's time to get ready to look for homes. And when we're doing that, we're going to do that through a couple of things. The first thing I do whenever somebody tells me what they want is I put them on an email drip, which is where I'm sending them houses every day. Even before we go see them, I'm just like, hey, give me some general criteria. Tell me what your must-haves are and what are your must-nots. Like, what can you absolutely not have? And so when they do that, I put them in a campaign and I just send them houses every day that they look at. This is the what you think you want part, which is the buyer's part. This is the I have a dream portion where you're like, I want XYZ all the way down the list, everything perfect, boom. And you start sending them properties. And so right after you get through that part, you have to get into the advanced search portion, right? And so this is where we use our systems and metrics and market analysis to try to help you narrow down your search within your realistic area, right? So I'm going to scour the area for refined results. I'm going to look for different houses. I'm going to evaluate markets. I'm going to run comparable properties. And this is when I'm going to come to you and say, okay, now that we have a refined criteria, let's go find the house. It's time to start looking. So after that, we're going to attend home showings. We're going to go see houses together. We're going to walk around. We're going to talk about them. I like to use a ranking system. So when we walk in the house, I'm going to say, at the end of the showing, give me a number 1 through 10. Give me your likes, dislikes. Is there something here that's a must not? Are you willing to compromise on a must not because everything else in the house is great? We're going to talk about potential avenues for purchase, right? I'm going to be like, hey, this house is a little higher than your desired price range. Are you comfortable with that? This house does not offer any closing costs. Are you able to compensate for that? Can we make it work? But this is where we find out what you really like as a buyer, because the pictures on MLS, which is our system to look at houses, they show you one thing. But when you really get into the house and you're walking around, you're feeling it, you will know when you find the one. People, it's I don't know how to explain it other than I just see people walk into houses when it's the one that they want to buy, and it's a completely different vibe. Like it just shifts. And so we'll find the house that you really like here. After that, it is time to submit an offer. So the first step in submitting an offer is we're going to decide on how much money are you willing to pay for that house, right? Is it the list price? Do you need closing costs? Do we need to offer over? Do they have multiple offers? Me as the agent, I'm going to call the other agent as soon as you tell me, like, this is the one I want to put another offer in. And I'm going to say, hey, please tell me what's going on. Do you have multiple offers? How long or how much closing costs can your client spare? Is there anything I should know about this house that I need to let my clients know before we put on an offer? Are you in negotiations with somebody? All of that information is critical to us for the next step, which is the structure of the offer is critical. Okay. What we put inside of that offer is the binding agreement, and that is what we need to make sure is absolutely correct. Are we offering list price asking for 3% closing costs? If there's multiple offers on that house, it probably won't work. So, what are we going to do to set our offer apart? Are we going to ask for the seller to make more concessions? Are we going to pay our own closing costs and then ask them for 3% to do a 2-1 buy down? What's our plan of attack to win you this home? And then we're going to help you. We're as the agent, I'm going to help you find the best possible deal. So my going in argument is if the house has been on the market for more than 15, 20 days, we're going in list price, give me 3%, and then we'll work our way from there. And that's how we make sure that I make sure that my clients get the best deal. Obviously, if I talk to the agent and that's not a feasible thing, we won't do it. But my job is to get you the best possible deal on the house that you want to make your own and make that happen. And this is kind of how we do it.
I do have one question.
Sure.
So, are there advantages of buying a home with cash, or why is it preferred over using a mortgage?
Yeah, so cash buyers have real power for a couple of reasons. Thing one is a cash buyer is quick. When you do a loan, there's so many things that could go wrong in the loan process that could prevent you from closing that house. Your loan could fall through. You could have a life circumstance change. I've seen people try to change jobs 3, 4 days before closing and lose their loan. With other people, like there's so many ways that the loan could fall through. Cash is hard money. Cash deals you could close in around 10 days versus the 30 days plus you may need to close a regular loan deal, right? Cash does not have to have an appraisal, while VA appraisal is mandatory. So these are adding steps that your buyers have to pay for. Cash talks, and that's kind of why it's guaranteed. Loans, although people may have the best credit in the world and everything goes well, it's not guaranteed. I have a personal example where a deal I just did where the person that I was buying from, our buyers were great. Everything was good. We were ready to close. We had been clear to close for actually about 2 weeks, but there was an issue with buyers on a different part of the transaction that almost made the deal fall through for like 3 people. It was no fault of my buyers, but at the same time, it was still a loan that was subject to other contingencies. Cash is not subject to that.
I have another question, and it actually goes
Sure.
back to the pre-approval process.
Further.
So, is it advisable to aim above whatever your budget is when trying to get pre-approved, or is it better to just aim for the exact amount?
I would say that I would recommend that you find your comfort amount and aim for that. And then most people I find as we start to look for houses realize that their comfort level is not their desire level. Comfort level here, desire level here. Normally, lenders leave some wiggle room for upward mobility within your pre-approval. Most lenders aren't going to give you the absolute max pre-approval off rip. So you just need to have that conversation with your agent and your lender when you're going in saying, hey, this is my comfort level, but I want to make sure that I do have some upward mobility should I choose to need it. And I find that fairly common.
We have thank you for that. We have another question from Facebook. What is earnest money, and how does it affect the deal slash contract?
All right, we are going to get to that if you'll give me a couple more slides, and I will get to earnest money. All right, let's
Sounds
go.
good.
Yep. All right, sweet. So now we're going to the negotiation and contract. So once we decide on what the offer is going to be, You and I are going to sit down and we're going to have a nice like 35, 45-minute phone call, or maybe we'll sit at a coffee shop and do it in person. And we're going to cover all of the disclosures that are required in Virginia. And there's a significant amount of things that I wish I'd had the time to go through in this video, but I don't, that agents are required to tell you when you purchase a home in Virginia. And this is to make sure that you are well informed about what our obligation is to you as an agent, your obligation as a buyer, as well as what the laws and restrictions of Virginia are when you purchase a home. After that, we sign all the paperwork. I will submit your offer to that seller's agent. And then the negotiations happen. So this is where I ask for 3% and they don't want to give us 3%. And I know your pre-approval goes up $10,000 more. Are you willing to offer $5,000 more in order to get that 3% closing cost and lower your mortgage by $600 a month with a 2-1 buy down? What is it worth to you? Within that, I need you to give me limits. I need you to say, hey, I love this house, but I only love it up to this dollar amount. I only love these amount of deviations from my ideal, scenario financially or within this deal. And that allows us to do what we're supposed to do and act on your behalf and fight for you within the contract negotiation process.
Can you explain the counter offer process?
Yeah, sure. So it's pretty self-explanatory. It's essentially I will submit an offer to an agent saying, "Hey, I want to give you 300,000 and I want 3% closing cost." And then they're going to submit me an offer with some lines in it that are initialed by their buyer with the changes they want to make. It's going to come back to me and it's going to say, "No, I want you to give me $300,000 and I'll only give you 1.5%." At that point, my client is now receiving the offer and has a decision to make. Do they want to accept that? Do they want to counter again? Is it not worth it? Do they want to go to another house? The ball is in our park if we want to accept that counter offer now, versus previously when we sent it to the seller, it was in their ballpark if they wanted to take it, negotiate, or go somewhere else.
Thank you. Thank you.
Yep. So now we'll go to the contract. Contract is the most important piece of paper, or 14 pages, if you will, within all the documents that you're going to sign. And it's going to tell you a lot. The first thing it's going to tell you is the date that the contract is signed. It's going to tell you who the contract is between yourself and the seller. It's going to tell you who your agents are and who they work for, because they're represented by they represent their brokers. It's going to detail the purchase price. It's going to tell you what the purchase price is and the method of purchase. So it's going to say $300,000 purchase price by VA loan, by FHA, cash. Could be a mix of the two. It's going to disclose some very important information that you need to know. Does it have an HOA? That is going to be in the offer, in the contract. It's going to say if it has an HOA. It's also in the listing, and your agent should tell you previously, but it's going to be in that paperwork. ACUs, which is the military air zones that are all around Hampton Roads. How much jet noise is near your home? That's also on the listing. But if it's not, it's for sure going to be in the contract. Was the house built prior to 1978? If so, is there lead-based paint? Is there a history of lead-based paint? Have they flipped the house and there's no lead-based paint? That's going to be in the contract paperwork. Inspections. Do you want a survey? Do you want a home inspection? Do you want a lead inspection? Do you want asbestos inspection? Do you want any kind of inspection? All of that is going to be in the contract. This is where we set the legally binding paperwork that makes the process of turning that person's home into your home. All right. And
I
so
have
now,
one other question. Sorry. What is it required to have an inspection on a home, and what does not have an inspection by the buyer?
so it is not required to have an inspection on a home inspection, that is. Back in COVID times, people were waiving home inspections. Just put an offer, I'll take the house, just give it to me. That was the kind of the mindset. When you waive a home inspection, you are taking away your protections. And when I say your protections, we're going to get to this in a minute, but your earnest money, because through the contract, you as the buyer are protected up until you agree upon repairs after your home inspection, that your deposit is yours. So you can get a home inspection, realize that the house just has so much wrong, you're not comfortable with it, and walk away and get your deposit back. If you waive the home inspection and your agent doesn't do it properly and does not actually have the paperwork signed, you just gave away your ability to walk away with your deposit if something's up with that house that you don't like at that point in the process. And I'll kind of dig down on that in the next couple parts, because we're going to talk about the earnest money deposit inspection and your deposit protections. So it's a good segue. First of all, congratulations, part one. You are under contract. We have found you the house that you want to buy, and we have had an offer accepted on it. And so now it's time to go through the next few steps. But first, Reggie, I'll let you. You got something?
No, I didn't. Thank you.
Okay. The earnest money deposit is a deposit, normally between $500 and $1,000, and it's just to prove that you're serious about the transaction. You're making that deposit to the title company so that if you breach the contract or go in default or do something you're not supposed to within the contract, that the other side is compensated. You can protect yourself, and you are protected, which we're going to talk about in a minute, but your earnest money deposit is just a deposit. It also goes toward your end game. So if you put $1,000 down and you only have $1,000 of closing costs, when you show up to that closing table, you don't have anything to pay because the earnest money goes toward that, right? And if something happens and the deal falls through and you're within your protections, you get that earnest money back. I've had deals fall through after the earnest money protection. Sometimes the sellers will take the whole thing. Sometimes you can negotiate half back. It just depends on what the situation is. After you put in your earnest money deposit, which is normally within 2 business days after you ratify the contract, it's time for the home inspection. So we're going to get our home inspector to go out to the property with you and the agent, and they are going to climb on the roof, climb in the crawl space, let the water run for 3 hours. They're going to test everything. And the whole purpose of this is to give you as the buyer the best possible full-scale look at what the property you're buying is. You're buying a property in this area for $250,000, $300,000, $350,000. Lifetime purchases. You probably want to know what's going on in the piping. You want to know how old the water heater is. How old is the AC? Does the roof have any dips in it? Are some of the frames broken? Did they put an addition on and not do it up to code? Is it messed up? You want to know all of this as a buyer. And that's what your inspection protects you with. After the inspection is done, the inspector will give you a debrief and tell you, hey, these are the big hits. You and I will sit down and we'll come up with what's called a PICRA, which is essentially a list of the repairs that you want made on the property at the expense of the seller. Now, I will say there is an art to this because if there are some really big repairs, you're probably not going to get everything you want done. But it's okay to ask. One thing I will say is I asked for fire alarms one time, the little just smoke detectors, and they laughed at me because they're like $5. So stuff like that doesn't make sense. But plumbing issues, any electrical issue goes in every PICRA I submit. No matter what's happening, if there's an electrical issue, it's going in that paperwork. Like I said, plumbing issues, any kind of grading, vinyl siding, right? I do a lot of VA loans. The VA, which has an appraiser we'll talk about in a minute, has the ability to mandate repairs. So I try to get ahead of that and put safety items, vinyl siding, SoFit, that kind of stuff in my inspection reports and in the request so that we don't have to deal with it a little bit later. After you agree on repairs and submit the paperwork for that, that is the first point in the loan where your deposit protection goes away. You can no longer walk away from that house scot-free without risking your deposit. Yes.
When you say ratify contract, what do you mean?
A ratified contract is when the buyer side and the seller side have agreed upon the terms of the deal, and the agent, whether buying or selling, will sign a part of the contract that signifies it is ratified, and that makes it an active purchase contract. And then we submit it off, and now you are in the process of buying that house. The ratifying is the binding of that contract to actuality between two parties, which would be yourself as the buyer and then the seller. It's
Okay, understood.
it's a physical signature. There's a block for it. It says selling agent ratified date, and that is the date that you now are under contract on that home and working toward purchasing it.
Okay, thank you.
Yep. All right, next, final details, right? So we're going to do the appraisal. So VA versus conventional or FHA appraisals are a little different. The VA, and I can't stress this enough, is not going to fund the loan if the appraisal comes back lower than the purchase price. So if you want to buy a house for $305,000 and the appraiser from the VA says it's only worth $300,000, the VA is going to tell whoever's giving you that loan, they got $300,000. They have to figure the rest out. Whether they drop the price, whether you pay the difference. It's not so similar with FHA and conventional. You have to get for a VA a termite and moisture inspection, which is essentially an inspection not for mold, but just to make sure that the structure of the house hasn't been eaten through by termites or any wood destroying organisms, that there's no fungal bacteria growth. And if there is, it's actually quite common. Termites are very common in the area, but you have to get it treated at the seller's expense. It is a requirement for VA. It is not a requirement for FHA or conventional, but most people still like to have it done. And then there's the repairs timeline. So remember all those repairs we negotiated, the new water heater, the new HVAC or whatever? They have to do that before you go for your final walkthrough. So what does that timeline look like? Are they doing repairs all the way until the 11th hour? Are you sure that the repair you're gonna go test the repairs to make sure they're good? I like to take my clients through multiple walkthroughs of a property. Normally, like a week after the repairs have started, we'll go see progress, and then afterward, we'll go see the final situation, and then we'll do a final walkthrough and test everything right before we close. And then the biggest final detail, which is all on you guys, is the you got to secure the bag, right? You have to get the loan. You have to give your lender all the paperwork they ask for, provide them all the documentation, and do everything they need you to do, sign what they need you to sign in order for them to fund the loan. Because we do all of this stuff and you don't get the loan funded and then you don't get the house.
Could you give us some examples of some of the things that you will have to provide in order to get the loan?
Yeah, absolutely. So obviously, pay stubs, work history, most important. If you're active duty military doing a VA loan, you'll need a statement of service saying, hey, I've been in the Navy this long, I'm eligible for reenlistment. Or if you're an officer, just my intend to stay in for X amount of years. If you're getting special pay, you'll need to document that. Depending on what kind of income you're using, it could vary. So if you're self-employed like agents, you'll need to submit tax returns. If you are working for a job, they may have timeline requirements of how long you've been working there. You may need pay stubs for 6, 8 months. As you continue through the loan process, they may ask you for your biweekly pay stub every time you get one until the loan is closed. Just things like that. If you're getting funds from a family member to help you close, gift funds, you're going to need a gift letter. There's just a bunch of stuff. You obviously have to do the pre-approval, so you need your social security number, driver's license, identifying documentation, things like that. And then anything that the lender could really need. I don't know what specific lenders all need, but I have seen deals where we get all the way to the end and they're like, "Yeah, we need this new piece of paper." And then they get it and they're like, "Yeah, but now we need another new piece of paper." And it's just it all about what the lender needs.
Thank you. Thank you for that.
Next, we're going to prepare for closing. So we're going to get what's called clear to close. This means that you have satisfied all of the requirements of your loan and it's time for them to fund that loan, which means after you get clear to close, which is a huge moment, we're going to go for our final walkthrough. I'm going to print off for you not only the receipts, but the pictures of all the repairs that were supposed to be made on that house. And you and I are going to go on an adventure and put on our home inspector hats and we're going to crawl around and make sure that they did everything they were supposed to do. And after we agree that everything is done to a satisfactory manner in accordance with the invoices and pictures that we got, we're going to call the title company and we're going to say, "Hey, it's time to close." And at that point, we get to the final step. It's closing day. You are now a homeowner. I got a picture of you down there, Reggie. Some other ones. Also, I like to call my closings my little photo shoot because I catch a bunch of candids of my people when they're closing. As you can see, the face in the middle, or when my wife and I closed, she had a stress ball because our transaction was wild. It's supposed to be a fun time. It's celebratory. You're now a homeowner.
Thank you for that. And now we can open up the floor to any questions.
Yeah, absolutely.
So going back to in terms of if you are self-employed, and let's just say that you receive money via cash, how does that ultimately affect the trying to, I guess, secure the loan process?
That's a great question. I will tell you that as long as you claim it on your taxes effectively, because when they do self-employment, they're not asking for payroll, they're not asking for just W-2s. They ask for 2 years of business tax returns. And then on top of that tax return, they're going to get tax transcripts to validate your tax returns that you give them. And so you're going to need to be above board, for lack of better terms, on all of that with the IRS in order for it to work out in your favor on the when you get to the loan process.
So essentially, you got to make sure you're filing your taxes correct as well.
Correct. Yeah.
So I have another question. What if the repairs aren't made on time when you're getting ready to close?
We are not closing. I will delay the closing until they are fixed. And it happens. It's common. Sometimes repair timelines, sometimes they start work that's supposed to lead to one thing and they realize more damage is there than necessary and they need more time. So there's a couple ways. My personal opinion is we're not going to close until your repairs are satisfactory. Other people don't have the luxury of the timeline, maybe. So we can do an addendum and you can pay for the services prior to closing and I have an invoice and they just complete the work after. Don't terribly recommend it, but you can do it. You can negotiate everything. But in my personal opinion, if we have the timeline and you're just like not homeless right now and we have a few more days, They're going to finish the work. We're going to go back and inspect again, and then we're going to take it to the closing table. So when I hand you those keys to your house, you're able to go unlock that door, and it's your home the way it should be.
Another following question to that: is the process for building a home the same?
It is different, and it depends on who you go with to do it. So there are, this is more lender stuff, but you could do a single close loan where essentially you put a substantial down payment down to the builder and you already own the loan, and you don't own the land. They buy the land, they build the house, and then you close on all of it at once later. There's also, multiple close loans where you go buy the land, close on the land, get a loan for the construction, and then you close on the house, and that construction loan turns into a mortgage. There's a bunch of different ways to do it. There's also the option that you took, Reggie, where we go to a development and they're already building the house and it's a new build, and you get there in time to pick out what floors you want and stuff. And then you just get a traditional mortgage with a 60-day closing process to meet the construction lender's timeline. There's many ways to do it when it comes to doing a new build. And there are definite advantages to doing a new build. Most lenders, preferred lenders for those builders, will give you closing cost assistance. I will tell you that most other lenders will say, hey, how much are they offering? I will beat it. So make sure you shop around for the right lender. There's a moral here.
And then a next question: what's the best way to know if the house is worth the actual asking price? Because now one thing you alluded to at the very beginning is how housing prices are still slowly increasing regardless of what the interest rates are. How can I know if somebody that's trying to sell me a $600,000 home is actually worth $600,000?
That's part of my job. So I'm going to look at that neighborhood that you in the house that you want to buy. And before we submit an offer, I'm going to sit down and I'm going to run a comparative market analysis. Now, this is something I do whenever I sell houses to make sure that I price them effectively to sell. And I'm going to treat the house that you're about to buy like I'm about to sell it. I'm going to look around the neighborhood and I'm going to find houses that have sold within the last 180 days within a 10% margin of error, meaning like 10% less or more square footage, same bedrooms, preferably the same amount of bathrooms, kind of amenities wise, age wise, right? And I'm going to run the numbers and I'm going to say, based on these houses in your neighborhood that you're looking at, the average price was this, your house has this that they don't, this is the right value or this is not the right value. And then it's your objective of what you do with it. I will
Thanks
tell
for
you
that.
my recommended offering price, and there's negotiations to be had.
Thank you for that. I might have slipped, but did you talk about the I guess the appraisal process?
I talked a little bit about it. So the appraisal process is essentially the bank is going to hire somebody to protect their investment, and that person is an appraiser. So the appraiser is going to come to the house. They're going to break down the house into a category, kind of like whether it's like brand new, pristine, or it's going to be kind of like pretty new with a lot of new upgrades, but not brand new build, or it's regular house, lived in, wear and tear. Oh, they have all these categories, and they're going to walk around. They're going to measure the square footage of the lot. They're going to look at the size of the rooms. They're going to make sure what upgrades you did, like a new HVAC system, a new water heater. Did you do a new kitchen? Do you have a pool? Do you not have a pool? And they're going to take all of those numbers and they're going to do a market analysis against all of the other houses that have sold in your area within 60 to 180 days, within about 10% error of margin. And they're going to come to a value assessment of that property. And that is the appraised value. And that is the value that the bank deems the house is worth. And so when they come to that value, that's when you run into, if it's overpriced, but the appraisal comes in low, the bank value is going to be that appraised value. And these are professionals, peak professionals that do this all day, every day. Their whole job is to assign value to real estate. And so you're sure you're getting a good one, a good thorough look.
Okay. Okay. What is the home warranty, and is it possible I can put that into my closing cost?
It is. So a home warranty, not to be confused with homeowners insurance. So here's how I normally break it down. Home warranty, right? Your fridge dies your first week in the house. Your HVAC system dies your second week in the house. A home warranty would cover that. A pipe bust underneath your garage that belongs to the city, that's your homeowner's insurance. That will cover that. Your house gets struck by lightning, homeowner's insurance. But a home warranty, there are a lot of them out there. I personally use a Chosa home warranty. They allow you to pick your own contractor. Their programs run around $800. And what it does is it gives you you buy the program at closing, so $800 or your agent buys it for you. I buy it for clients all the time. And you get to a certain amount of coverage on a system. So if you buy $800 worth of coverage at closing, if your HVAC goes out, they'll give you $2,500 toward a contractor of your choice to fix your HVAC system for 1 year after you purchase the property. And you can renew that every year. So then next year you go up, everything was good, you renew your policy, and then the HVAC breaks and you're still covered. And that's what a home warranty is versus which is not mandatory, while homeowners insurance is very, very much mandatory.
Thank you for that. I have another question from Facebook. Is 3% the most a lender will allow the seller to pay in closing costs?
Um, Let me figure out how to navigate that correctly. So I will say that the VA has this thing about 4% closing costs, but now you can do concessions, not closing costs. So I use a wording template that says essentially X amount of 3% of the purchase price of the home to be used for points or any kind of other stuff at the lender's discretion. And what that does is not stovepipe your lender into having to use it all for one thing, and it allows you to accept up to 6% in concessions on a property. So I've seen people get a 2-1 buy down and all of their closing costs paid for because they worded 6% correctly in the offer, which is the structure of the offer that is vital, versus just saying, I want 6% in closing costs. Well, the closing costs don't cost 6%. So now you've stovepiped me into having this extra money that I can't use.
Makes sense. Makes sense. So, based off since you work in this particular area, and majority of well, uh, what can you say the housing, I guess, the market looks like in the near future for the Hampton Roads area?
I will say the market is about to pick up. We are in a very unique market because of military, right? Military is like 90 something percent of our market out here. PCS or, permanent change of station transfer season for the summer is just around the corner. The market really hits peak highs around starting the first week of June through the end of August because that's the middle of the transfer season and school is out for summer. So people are trying to move in the area and get their kids registered before the school year starts. And so the market gets very summertime is always booming into August. It's always some of the best months for the market. And then it kind of slows down sometimes during Christmas, January timeframe. People want to be home for the holidays. So after around Thanksgiving timeframe, people are less likely to move because, like I said, they want to be home for the holidays. And it starts to pick up in February. But for the coming future, this summer is going to be extremely high. Inventory is up from what it's been the last few years. The market is booming, even with the interest rates a little bit higher than most people would like. There are still substantial amounts of buyers and sellers in the Hampton Roads area at all times.
Last question for those that are not experienced with it. Can you explain what equity is and how can we utilize it?
Sure. So equity is, in layman's terms, how much more is your house worth than you owe on it? So if you buy your house for $300,000 and say it never increases in value, but you pay on it all the way, so now you only owe $100,000, you now have $200,000 in equity. But in Hampton Roads, when COVID times, a lot of people bought and the house values have substantially increased, causing a drastic increase in equity for people. And you can use that in a couple of different ways. You can do a cash out refinance where you cash out, you do a refinance for a higher value to bring your loan amount up to what your home is actually worth. And you take the difference between what your loan value is and what you owe in cash. You could do a HELOC, which is a home equity line of credit, which is essentially kind of like a credit card attached to your equity. And then there's a home equity loan, which is essentially a second mortgage. These are more so stuff that you would talk to a lender about, but there are plenty of options to use your equity. But talk to a lender about what's best for you.
Thanks for that. And as we wrap this up, Andy, is it possible you can give us three things to remember, at least from this brief?
Yeah, absolutely. Your agent matters the most. Make sure you pick a good agent. The next thing I want to say is pick a good lender, and your agent is a professional. So, heed what they say and just do what's best for you, right? Because, the home buying process is about you getting a home, you moving forward to that next chapter of your life. Do what's best for you in the whole process. And your agent's whole job is to look out for your best interest and advocate for that. So if you do what's right for you and your agent does their job, you'll get a home and be extremely happy just fine.
Thank you for all of that, Brother Gomez. I really do appreciate having you here, explaining the home buying process. Like I was mentioned earlier, I still remember the first time I bought my house. It's probably one of the most expensive things I'm going to be buying. So it's kind of making sure that you are making the right decisions, and it can be a extremely stressful process. So
No,
I'm
you
glad
don't say.
you I'm glad you are here to actually help us and understand what do we need to do in order to navigate this home buying process smoothly. Um, thank you for thank you for everything.
Yeah, absolutely. Please, my contact info is on the screen. Take a picture, shoot me a text, give me a call, reach out anytime. I'm happy to help. Even if you're not ready to buy and you just want to ask questions, talk about the home buying process, or you're not sure kind of where you're at within it, I'm more than happy to help you. Any friends, family, anyone, I treat everyone like family. I'm very close with every single client I've ever closed with. We're going to be doing an event soon to celebrate them and how much they've helped me come in my life. So you're more than welcome to join our family of home buyers.
Thank you. Thanks for that. All right. And we're going to wrap this up.